Just because I want banks to issue student loans instead of the government doesn't mean that I don't want some common sense parameters put on these loans. Here's what I would want for students and lenders. First, the maximum repayment term for undergraduate student loans should be 10 years. If it takes more than 10 years to pay off your undergrad loans, then it's likely college was a bad choice. Second, there should be no income-driven repayment plans. If a student takes out more debt than what can be repaid by their post-college salaries, then this was a mistake. The answer here was to avoid debt in the first place through lower cost education. For example, if your goal is to become a teacher or a social worker, which basically makes you a hero, then I don't think you should take out any undergraduate student loans at all, which means you wouldn't have to worry about income-driven repayment. Third, the loan interest rate should be fixed, not variable, so that the student will know the full repayment schedule on the day the loan is issued. This repayment schedule includes the days that payments are due and the amount of each payment, which won't change over the term of the loan since the interest rate was fixed. Fourth, there should be no penalties for prepaying your loan. This is typically the case, but it is so important that I would never want it to change. Fifth, the total amount of undergraduate student loans received in a year cannot exceed the annual cost of the college's tuition, fees, health insurance, and course materials. Basically, student loans should not be used to pay for living expenses. 6, there should be a universal application for student loans accepted by all private lenders that's similar to FAFSA, meaning a student wouldn't have to fill out a new application at every bank just to get a loan quote. 7th, I would revise the truth in lending disclosure that students receive before they agree to take out a loan. The first revision I want is to include a loan summary in big red text that is the only text on the first page of the disclosure. The summary could look like this using some numbers I made up. Warning. You are about to agree to take out a loan, which is a financial obligation you must pay back. Even though the amount of your loan is $5,000, you will have to pay fees and interest, so the total amount you must pay back is $6,900. You will pay this $6,900 over 10 years, which is 120 months, meaning your monthly payment amount is $57.50. If you fail to make a monthly payment, you will be charged a late fee, which is even more money you will have to pay. If you stop paying your loan entirely, this will negatively impact your credit and your ability to buy other things in the future. For more information about this loan, please review the other pages in the disclosure. The second revision I want to make is to include a full repayment schedule on the last pages of the disclosure. This schedule will show every day a payment is due plus the payment amount. Students must sign next to the first payment date and the last payment date to acknowledge the days and years in which these payments happen. Most of these parameters should help protect students, and it would be nice if the lenders were required by law to follow these parameters. But if there was no law in place, then I would strongly urge students not to borrow money outside of these parameters.